And a very good morning and welcome to the second HBF live event, our second webinar. And it's great to see so many of you here. Around 500 of you have registered to take part and sign up to listen to today, watch today's event. So we hope you have a very interesting and informative time over the next 90 minutes or so. Of course, our webinar comes in a very timely fashion, not 24 hours after the speech by the Chancellor of the Exchequer, his summer statement to the House of Commons yesterday afternoon. And of course, that's one of the things that we'll be touching on in detail as we go through today, particularly with our first two speakers. So let's have a look very quickly at the day's agenda so you can see what's going to happen over the next 90 minutes or so. And first of all, as you can see, we've got two very experienced commentators on market affairs and two people who are very plugged in to what's happening and indeed will have very good views and insights into what's coming next. Grania Gilmore, who's a regular at HBF conferences, used to be of the Knight Frank parish, but now is head of research at Zoopla. And I think making his first appearance, but very welcome appearance, David Livesey, who's the group chief group chief executive at Connell's, of course, one of the biggest, if not the biggest, estate agency chains in the country. And David's insight into what's happening across the whole market, I'm sure, will be fascinating for many of you. After we've covered the first session, which, as I say, is going to focus on those areas of the market and where the market's going, we're going to talk about planning. This was a subject that came up on probably more questions than almost anything else on our first webinar. And so a week or so ago, Andrew Whitaker, the HBF's planning director, sat down with Michael Bingham, who's the acting chief planner at MHCLG, for a fascinating chat. And that'll be coming up in our second session. And then after that, members of the HBF team will be on hand, led by our managing director, Neil Jefferson. David O'Leary will be here, and amongst other things, he'll be able to bring you up to date with Help to Buy. And Kieren Walker, our technical director, will also be here, and he will give you the latest news. Not, I'm afraid, that there is a huge amount of news on what's happening with the building regulation changes on Part L and Part F and building safety and so on. So that's the agenda for the next 90 minutes or so. But before we go to our first speakers, let's just pick up on a few of the key issues that were raised by the Chancellor in his statement yesterday. A statement which he labelled as being focused very much on jobs, on supporting jobs, on creating jobs, on protecting jobs. But probably the biggest announcement for the housing sector, not just the house building sector, but the second-hand housing market as well, was confirmation of stories that have been running in the press for several days of a change to stamp duty, and in particular, of course, the change to the threshold at which stamp duty becomes payable, which has now been increased from £125,000 to £500,000 with immediate effect until the 31st of March next year. And both of our speakers will be talking about that in just a moment. In addition, though, unfortunately, there was nothing specific on Help to Buy in the statement yesterday, and we'll touch on Help to Buy later, as I've said, when David O'Leary joined us. But the Chancellor's statement did pick up on job retention bonuses, on kickstart schemes, and on VAT cuts. And a lot of this was obviously aimed at the hospitality sector in particular, including, of course, the opportunity to go out and eat for half price on Mondays to Wednesdays during August, which I'm sure a lot of you will avail yourselves of, as you probably can't get overseas this summer as it currently stands, or at least not as easily as you could in the past. I just wanted to touch on a couple of key issues before we move on, issues that have been dominating the work at HBF over the last month or so since we held our first one of these live events. The return to work has gone extremely well. I think you probably all know that, those of you that are working directly in the house building community. Production efficiency seems to have returned to somewhere between 80 and 100%, depending on the type of site and exactly what sort of production levels are possible. The sales market has rebounded in a much more positive way, frankly, than almost any of us thought was likely, and appears to have continued that strength during the second month since we were given permission by the government to reopen for sales on the 13th of May, almost 2 months ago. We've had no real instances at HBF of any issues, whether they be health and safety issues or media issues or issues with members of the public concerned about the work on housing sites. So I think it's a huge congratulations to the entire house building community for the way that they've been able to design and implement some pretty strong protocols to ensure the safety, of course, of our own workers, the safety of our customers, and ensuring that Public Health England guidelines and the rules on social distancing are adhered to. The second area I just wanted to touch on was something you may not know too much about, but which you are likely to hear an increasing amount from us about in the months and years ahead, and that is what's known as the CLC Housing Working Group. Now, that CLC is the Construction Leadership Council. It's something we're a part of. It encompasses all areas of construction, but it's recently reinvented itself, partly as a consequence of the special situation we found ourselves in, and rather than meeting 2 or 3 times a year, it's been meeting on a daily basis, now meeting 2 or 3 times a week. And we have been asked to lead the housing working group of the CLC. And that is a pretty wide-ranging group. It's a standing group. It's going to be around for a little while, so it's not time-limited in the sense of coming forward with proposals for either the next budget or the next major event. But it is focusing on, and we are able to drive this agenda, which is the advantage for us. It gives us another channel into government, and it is focusing on areas like SME finance, like affordable housing, like the planning system, which of course are key areas of HBF's lobbying work in normal times. And the final thing I just wanted to touch on is the environment agenda, which is very much back with the government. And you would have noticed the Chancellor and others talking about green jobs and the green recovery, and that is clearly going to be a central theme of what emerges from government thinking over the next several months as the recovery takes shape and further measures might be considered necessary. It matters to us because the environment agenda is clearly important. We have the COP26 summit taking place not now in November of this year, but in November of next year. And last week I attended a pre-COP26 discussion with about 150 of the top CEOs and chairmen right across the country from all sorts of businesses, focusing on the areas where business will be involved in the lead up to COP26, most of which you'll be not surprised to hear centers around the commitments which specific industries, businesses or sectors are prepared to make as to what their part is going to be in driving the government's net zero agenda. And let's not forget that the government has put in law, enshrined in law, the requirement for the economy and the country to go to net zero by 2050. And whilst that may sound a long way off, it really isn't. But in the more immediate future, we have the Future Homes Standard set to come in 2025, which is going to have some far-reaching implications for how we operate as home builders and what we're allowed to do on site. And that's something that you may well have questions about, and something I know Kieren Walker will be very pleased to talk about later in the show. So those are just my introductory remarks, and I hope that kind of sets the scene for you. And without further ado, we'll move into our first speaker. Before I do, just to say, if you want to ask questions, please do. It's very easy. If you look on the screen in front of you and look below where I'm probably appearing at the moment, you'll see a question box. You can type your question in there, and we'll do our best to answer them all as we go through the next 90 minutes. And also, we're going to be running some opinion polls. Those of you who were with us at the last event will be familiar with this. Again, very easy. We'll ask some relatively simple questions about some of the big topics that we think are important based on what you've told us about the things that matter to you. And we'd like your opinion on those questions as we go through, and we'll obviously feedback the results to you later in the program. So that's it from now from me. And I'd like to introduce our first guest, who is well known to many of you, a regular face at HBF conferences over the years. And I'm delighted to welcome her this morning, Gráinne Gilmore, who is now Head of Research at Zoopla. Gráinne.
Good morning. My name is Gráinne Gilmore. I'm Head of Research at Zoopla, and over the next 15 minutes or so, I'd like to share with you our outlook for the market over the rest of this year. Now, as ever, I hope our data and insights will be of use to you when it comes to making your business decisions in the year to come. So I want to look at 3 main areas. First of all, activity, first in the resales market, and then focusing in on new homes and how that compares. Secondly, looking at pricing and the factors feeding into that, to then share with you our outlook for the rest of the year. So first, we have demand rebounding. Now, this chart really relates only to the resales market, but it really sets the tone for what's been happening in the whole of the UK housing market since we had lockdown and then since the English market opened on the 13th of May. So this shows us that demand, and we mean here buyers with really strong intent, we see that level as at 40% higher than the beginning of March. That is no mean feat. We had a really strong January and February in the housing market in the UK. When we break it down region by region, we can see more kind of nuanced trends emerging. So that green line is what's happened in Wales. It took a bit longer to bounce back because the Welsh market was shut right up until the 22nd of June. Similar story in Scotland, where the market has only just reopened. So it's that difference there between the rest of England and London, which is quite interesting. So we've seen a rebound in both markets, but London just lagging. Both markets now moderating in terms of that demand bounce back. That's only to be expected because that level of growth in demand really couldn't be maintained. So that's kind of an expected level of just levelling off levels of demand, but still for the rest of the UK, 50% higher than the 1st of March. What we're also seeing is that that demand is translating into sales agreed in the resales market, now above 4% where they were back at the beginning of March. And just to put that in context, that's 20% higher than we were this time last year. The number of sales subject to contract 20% higher than 2019. And again, when we break that down by region, you can see the English regions leading from the front, London just lagging a little. It'll take Wales and Scotland a while to catch up because their markets have only just reopened. And also new inventory coming to the market, people choosing to list their homes for sale, perhaps because they're thinking they want to now move on to another home. But just one thing I would draw your attention to here is the gap between the purple line and the green line, because that supply-demand imbalance is actually putting slight upward pressure on pricing at the moment. So now to the key facts, what's happening in new homes? Well, you can see that bounce back in demand. That's the purple line from the beginning of March to now in the resales market, averaging around 46%. For new homes, that's 66%. So there's been a real rebound in demand in the new homes market. And I can tell you at first-time buyers, the number of first-time buyers looking at new homes up 87% since the trough right in the middle of lockdown. And we know that the first-time buyer interest is weighted slightly towards new homes. So 45% of the interest in new homes coming from first-time buyers. These are people who self-identify. But in the resales market, around a third of people looking at homes are first-time buyers. So it's definitely weighted towards the new homes market. And there are key reasons for that. As all of us will know, Help to Buy is a real draw at the moment, especially because of what's happening with mortgage lending in the rest of the market. And we'll come back to that later in the presentation. Also, the really high quality CGIs that new homes developers and house builders have always used, and also virtual viewings, have really meant that new developers were really kind of ready to go as soon as lockdown kicked in, and people had to do much more over their screens, on their laptops, on their mobile phones. So really strong bounce back in demand for new homes. And when we break that down by region, you can see that it's really the North East, West Midlands, East Midlands, this kind of Midlands and up slightly to the north, really leading from the front. Down to the right-hand side of this chart, we have London still showing growth, but just lagging like we saw in the resales market, the rest of the market. The Southwest is quite an interesting one. And we think this is probably spurred by the fact that we saw a lot of people looking and interested in homes in those southern coastal cities. So that might be existing homes already sitting on the waterfront. And so that means that resales interest is just outnumbered the new homes interest, but still on every market, on every measure across the UK, demand is up compared to where we were in early March. When we break it down by price band, it's new homes priced between 300,000 and 500,000 that are leading the way, but that was a very close call. There's increased demand at practically every price level. Now, this chart from Capital Economics I thought was so interesting because it shows construction activity from housing. And what I was really drawn to was that V shape at the end, because quite frankly, everyone loves a V shape at the moment because that's what we're hoping for the economic recovery. but that real bounce back in activity, not really surprising, but good to see evidence of it on a chart. As you will all know, you've all been back in business way before anyone on the high street was allowed to open, and other parts of the economy were allowed to keep going. So that is really shown now in the figures. And what's interesting about this chart is that capital economics have correlated what's going on in construction activity with new home starts. And that bounce back in activity would suggest that new home starts start to rise into the beginning of next year. But as they've said, the other factors, the other economic factors weighing on the new homes market at the moment means that that's not really a given. Construction activity has picked up. All of us will be discussing it this morning, but we may not be at the levels which would suggest a pickup in delivery of new homes until we're looking maybe down the barrel of much later in 2021 or 2022. So some of the key policies also impacting on the new homes market, and some things to think about as we move ahead. Help to Buy, bit of a disappointment that Rishi Sunak didn't talk about this at the summer economic statement. I mean, the stamp duty change, which I will come back to, is a real boost to the market and affects the whole market. So all homes will really benefit from that. But the Help to Buy, maybe hopes of an extension for the current scheme past April 2021. But never say never. There's no guarantee that it won't happen later this year. But Help to Buy is still a real driver into the new homes market, and especially for first-time buyers who then can keep applying right through till 2023. We know that sustainability is being maintained as a key driver for the government at the moment. They talked about sustainability. They talked about that insulation grant at the economic update. So sustainability is key on the agenda, even though we've got COVID, even though we've got Brexit, it is key on the agenda. We had Barratt just announced that they want to be kind of net zero carbon by 2030. So that's a real key policy to look out for. And then what does COVID mean for the type and location of homes into the future? Where might sites be viable now where they weren't before? And again, I'll come back to this on the next slide in terms of what we're seeing about what people are looking for and in what locations. But there's no doubt about it. We are seeing greater demand in areas around, just beyond current commuter zones, because it's true, if you're only going to be working from home 1 or 2 days a week, your tolerance for commuting will grow. And so there's real opportunities for sites, for developments, just beyond the current kind of commuter cutoff. Also, infrastructure is going to be key, not just broadband, Wi-Fi, 4G, although these are going to be absolutely crucial from now on, given that we're all still working from home. But trying to just start out on a greenfield site can take so much longer. You need the roads in there, you need the infrastructure in there. So the government really needs to give support to be able to deliver that infrastructure and be very clear about what it's going to do into the future to really help boost development across the country. So I mentioned before, is there a big exodus? Is everyone saying now's the time we want to move to the country? The answer is not really. When we look at buyer demand, we can see that the bounce back in buyer demand for rural locations has been slightly higher than urban locations. That's true, but there is still real buyer demand for city living. What we've also seen is more searches, however, for outside space. So of those people who put a search term in when they're looking with us, we've seen the number of people looking for gardens nearly double. We've seen the number of people looking for balconies rise by 166%. We've also seen a rise in the number of people looking for terraces and for swimming pools. So we do feel that there might be a post-COVID change in how people are choosing to live, where they want to live and how they want to live. But we can see that there's still demand in urban areas. So it's that kind of wider commuter zone that there's real opportunity. So now, what do we feel is happening to pricing? I want to run you through some of the factors currently having an impact. So here is our index of house prices. Now, this is our 3-monthly growth rate. I know, sorry, there's a lot of different colors and a lot of different lines, but really, I just want to draw your attention to that dip at the end. So we're just seeing a slight slowing in the 3-month rate of growth in house prices, but we're still in positive territory on the 20 city index, which can really be seen as a proxy for UK house prices, and in various cities across the UK. Across the UK and house prices, we're still up 2.4% on the year. And we feel that pricing may actually be supported in Q3 before it starts to come on a downwards trajectory. So there's been a lot of speculation that there'll be really solid price falls in 2020, and actually we think that it's going to be a longer process than that and well into 2021. And one of the key reasons for this is, first of all, asking prices. So asking prices is we look at the asking price of everything sold on the website, and we just average it up. There's no modeling applied to it. Now, we don't use it really for anything except as an indicator of direction of travel. And as you can see from this chart, it really works quite well. When we put them together, it's been telling us what direction things might move on the house price index, although the volumes are slightly, very volatile compared to our house price index. You see that at the end of 19, and as we got into January and February this year, as we talked about the market much more exuberant, we knew what was happening in the election, we knew what was happening with Brexit, asking prices rose. They fell during lockdown, and now they're back up 7% year on year. So the likelihood is that this is actually the activity in the market that we're seeing at the moment, probably putting upwards pressure on pricing just at the moment. Also, when we talk about that demand putting upward pressure, which demand are we talking about? There's two different cohorts emerging. We have the pent-up demand of people who had their transactions stalled. We estimated it was around 373,000. But there's emerging evidence now also that we have a new cohort, a kind of a COVID new buyers cohort, people who used lockdown to reflect on how they were living and where they were living. This also comes back to that rural-urban description as well. Because a survey from the ONS said that during lockdown, around a quarter of people, or more than a quarter of people, said they were going to make a big life change. And a third of those said that that was going to be living somewhere different. And when it's an ONS survey, and that's kind of using as a factor for the whole population, there's quite a lot of people who've maybe had to think about how they're living during lockdown. So this kind of additional demand coming to the market. So these, the pent-up demand and the new demand all coming to the market, feeding into a rise in asking prices. But however, we have the economy, and we know that while asking prices and demand, and that demand supply and balance may also be putting upward pressure on pricing, we know that the economic outlook is probably counterbalancing that with downward pressure on pricing. But that will probably be more to the end of the year. And this chart shows us why, because the activity PMIs, the Purchasing Managers Indices, shows that there has been a kind of V-shaped bounce back in activity. But the real question is now for the UK, what happens now? It's this gap between where we are now and how do we get back to where we were at the end of last year. And that is the key question, and that is why we have a cloudier economic outlook. We know the government's approach has been to offer a lot of schemes and policies to help support the economy, and yesterday's statement being no different. But even so, we know that there's going to be rising unemployment, and those will be coming through in official figures very shortly. We may be prone to more local lockdowns. So between what's happening with COVID and the outlook for the economy, it's looking cloudier for Q4, and that may start to put negative pressure on pricing. An additional factor is the availability of mortgage lending. So this is really crucial for the resales market in particular, where people with smaller deposits won't be able to access the market unless they can get mortgage finance. This chart from the bank shows us the scale to which mortgage lending came off, or the availability of mortgages to take out really came off. And the reason for that really was mortgage lenders were very busy looking after everyone who needed a mortgage holiday, nearly 2 million people. So their ability to offer new lending was curtailed to a certain extent. But the question is now as to how far this lending will come back, especially for 90-plus mortgages. Now, there's been a bit of good news. A couple of lenders are back in the market, whereas they'd come out a month ago. But still, the number of 90 and 95% mortgages currently available to buyers is nowhere near the levels it was before lockdown. So if people can't get access to that finance, that will have an impact on activity in that area of the market. However, for new homes, Help to Buy is the other option, and people can use the Help to Buy scheme with a smaller deposit to use that scheme to get onto the housing ladder or to move into a new home. So stamp duty, it really is a boost. So we've talked about, the balancing factors in the market at the moment, and upward pressure on pricing in the short term, downward pressure in the longer term. But this stamp duty will run right through the end of the mortgage holiday, will run through the kind of end of furlough. So it really will be a bit of a boost to the housing market, and of course Rishi Sunak, the Chancellor, hopes the wider economy, because more activity in transactions and sales means more investment, because people are buying new fridges, new freezers, they're using home movers, they're out spending on the high street. So it really is a boost. The map that I've shown you here is really to explain who's going to benefit the most. There are many areas in the north of England where average prices suggest that people aren't paying very much stamp duty, if any at all, for most transactions at the moment. The areas in red are where people will benefit most from this change. There are savings of up to £15,000 on offer, and it's really that outer commuter zone of London, out into the southwest, up into Hull, up into Cheshire, that will really benefit the most from the changes and the announcement that Rishi Sunak made yesterday. But it is really good news for everyone in the housing market at the moment. So that will help provide support for pricing, for activity in the market over the next year. So it feeds into all the factors affecting the market as we see it. So the balancing factors we have at the moment, demand versus supply, putting upward pressure on pricing at the moment. We have that additional policy boost, but we know from the economic outlook, there's going to be perhaps downward pressure on pricing towards Q4 and into Q1 in 2021. So we can see that activity levels are up. We can see demand has risen strongly and now moderating, as we would expect. Pricing, we think, will be steady through Q3, and we'll start to see some impacts of that negative pressure on pricing through Q4 and into Q1 2021. But we know there's a lot of conversations with buyers going on to really engage them so that that process will continue right through the end of the year and into next year. So that's our outlook for the market, and I'm very happy to take any questions you might have.
Well, Gronia, thank you very much indeed. Gronia actually recorded her presentation very late last night to ensure it was up to date and able to take into account the Chancellor's comments yesterday, but I'm delighted to say that Gronia is live with us this morning, and very shortly after we've heard from David Livesey, she will be taking your questions. So do keep those questions coming in. Quite a few of you have already done so. One question that we have had, just to clarify one thing, and I'll make it clear again later, the slides will be available early next week, and I think our production team, our events team, will be sending you some sort of link so that you're able to access those. And indeed, there will be a replay of this webinar on our website as well, probably from early next week as well. So moving on now to our second guest, David Livesey, as I said earlier, making his first appearance, I think, at an HBF conference, but a veteran of this industry. He's been around for nearly as long as me, and there aren't too many people who can claim that these days. David's been at Connells for 30 years, not all of them, I'm sure, as Group Chief Executive, but that's the role he now occupies, the hot seat in one of the biggest estate agencies in the country. Now, David actually is here live as well, but he also pre-recorded his thoughts, and those were done before the Chancellor spoke, but he'll be updating his thoughts on the Chancellor's speech at the end. But lots of fascinating detail. David, over to you.
Good morning. Great to see so many of you logged on today. I'm going to share with you some data sourced from across the Connells Group, which will hopefully give you a flavour of how the residential property market, both new and second-hand, has been performing since we came out of lockdown just over 6 weeks ago. This slide is not advertising, it's to give you a flavour of the scale of the business that I'm sourcing the data from for you today. Connells trade through 600 high street estate agency branches. There's 25 different brands here, some of which you may be familiar with depending on which part of the country you are. If I give you Peterborough as an example, on Peterborough High Street, we've got a Connells branch, a William H. Brown branch, and a Sharman Quinney office, all competing happily against each other. 600 estate agency branches represents about 3% of the total number of estate agency branches in the UK, but we represent about 6% of market share, gauged by the number of instructions that we take into our business. So the data that I'm giving you this morning is sourced from a 6% market share player. That's the biggest market share of any estate agency group in the UK. You'll also see at the bottom some additional logos. Connells Survey and Valuation is one of the big three chartered surveying businesses. Some of the information will come from there. And the New Homes Group, which trades as New Homes Mortgage Helpline, Talk24 and NHPX, is a huge business specialising in new build mortgages and the management of part exchange properties for the house builder community. This is the kind of data source that I'll be sharing with you shortly. And okay, so this is a bit of advertising on this next slide. Again, just aimed at giving you our credentials in the specialist new build space. We're the biggest seller of new build properties in the UK, just over 9,000 last year. We're the biggest mortgage broker in this space. To give you a flavour of that, nearly 1 in 6 Help to Buy mortgages last year was arranged by the Connells Group. So you can see from this slide that we've got a real specialism in that whole new build sector, which hopefully I can colour in for you as I go through these slides in terms of what the market is doing, both new build and in the wider residential market. Okay, let's look at the top of the funnel. That's inquiries coming to us from the property portals, Rightmove and Zoopla. You see here the levels that existed to the left-hand side of the graph just before lockdown, instant drop into lockdown. People were still using the portals during lockdown in increasing volumes, and then a big jump as we came out of lockdown. And that leap has stayed right up there. You can see the 7-day moving average is the light blue line, just to smooth things out. But you can see those 6 weekly blocks have stayed really strong. So I'm pleased with this as a top level measure of buying demand immediately post lockdown. Okay, let's move one step down the funnel then from the portal inquiries to look at the inquiries that we're getting in as a business. And down the left-hand side of this slide, I've broken it down between phone inquiries and email inquiries. With the phone inquiries, you see a much stronger pickup, and that's really good news because when an applicant phones us, they're a much more committed potential buyer than if they simply send an email through. Over on the right-hand side of this slide, you also see the growth pre and post lockdown of first-time buyers going from 30% to 35%. So a notable increase in first-time buyers as a proportion of the total, despite the lack of high LTV mortgage money, which I'll come on to later. Why do we think it is that there's such an increased appetite to buy post-lockdown? Well, 2 factors that are worth talking about are the number of babies that are going to be born from December onwards, 9 months from the start of lockdown, in all probability. We will have a baby boom, and also the number of divorces that are likely to happen shortly after lockdown. Bad news for some, but good news for the market because 2 people then need 2 houses rather than 1. Now, just moving briefly to the supply side of the equation, comparing this year with last year, what we're looking at here is the number of total instructions, this is new and second hand, coming to the market during the period of lockdown, which falls away to virtually nothing. It's picked up very nicely, is staying strong, and if anything is still growing 6 weeks post lockdown. So this is good for a market which has been starved of stock for quite some time now. Now this graph is a thing of beauty. This is my weekly sales graph. Sales agreed, reservations, new and second hand combined across that 600 branch estate agency. This is showing you that very steep fall off immediately post lockdown, virtually nothing during the course of lockdown. But this is what the economists would call a V-shaped recovery. It's an instant recovery out of the lockdown period. We expected to see it rise and then fall back. That hasn't happened, and in fact it's still growing. So we're now approaching pre-lockdown sales levels that we were seeing in late February and early March. That's quite extraordinary, and again, great news for the future of the market. Very briefly on house prices, you see a slight dip here over to the right-hand side of the graph during lockdown, but then a pickup. As properties start to come through to exchange, we're seeing no real impact on values, marginal move backwards, but overall I think the direction is still upwards slightly. Now, still on the subject of value and house price, here's some data that you probably won't see anywhere else. This is looking at our chartered surveying business, and it's measuring the incidence of down valuations where the surveyor doesn't agree with the valuation that he's been given on the property. And the average amount of those down valuations when they do happen. 18% of valuations are resulting in a down valuation. And that's almost identical to what was happening before lockdown. It was running at 17% there. And the average scale of the down valuation is 10%. This is really interesting. The reason being is that these figures are the same as they were before lockdown, but yet now remortgages are still a higher proportion of the total. And with remortgages, there's usually a higher incidence of down valuations because at that point, all we have is the owner's estimate of the property value. So again, I take this to mean that the chartered surveyors are viewing the lockdown period very much as more of a pause button than a structural change in the market that they should be reflecting in their valuations. Again, I think this is very promising news. Okay, let's just focus now on pipeline, sold subject to contract but not yet exchanged. And in the left-hand graph here, what we're seeing is a reduction in abortives, cancelled sales coming out of that pipeline during the period of lockdown. And that's principally because people were pulling out of sales during lockdown, but we didn't know about it. The lawyers weren't there, the conveyancers had been furloughed, so that wasn't being communicated to us. And that also explains the peak immediately after lockdown of cancellations, which in itself would be alarming, but in fact it's not. Because if you trend that out, our abortive rate is very little different to what it would normally be. And we did some research when we came out of lockdown with our buyers and sellers and through the law firms who are doing the conveyancing. What we found was that on average, 75% of the people in that pipeline wanted to get on and get exchanged as quickly as possible. About 20% wanted to proceed but were slightly hesitant, and then 5% were withdrawing from the sale. Again, very promising. And over to the right-hand chart, we've seen that reduction in the pipeline because of the sales coming through and exchanging, because of those abortives, but now picking up nicely as new sales are coming into the frame. And I expect that very quickly to be exceeding the scale of pipeline that we had this time last year. And then on to exchanges. As you would expect, exchanges were depressed during lockdown, with most of the lawyers being furloughed and therefore little activity taking place, or if it was, then being stuck in a chain with another property where there wasn't the lawyer in place. And then now a nice pickup as that pipeline, as I've already said, starts to come through to fruition. And again, we expect to see that build up, particularly as the pipeline is rebuilding as well. Now we're looking at the critical issue of mortgage lending. On the one hand, we've got lenders now bringing out 10-year products at sub 2%, which is quite extraordinary, but we've got some real challenges on LTV. Let me take the graph on the left firstly. What that's showing is that during lockdown, remortgages, both normal residential and buy-to-let, accounted for over 70%. By remortgage, I mean remortgage and product transfers. But that's now adjusting back to a more normal situation. But the transactional mortgages are virtually all being done with the customer over the phone, which is a big change, and hopefully that will stay with us, make it easier for people to access mortgages. But over to the right-hand side, we're seeing the impact of LTV, low LTV lending from the banks and the building societies. And therefore, even though there are more first-time buyers available, they're having to put bigger deposits down. We've seen Nationwide pull out of 90% lending, but we've still got Accord, Platform and Bank of Ireland in there, and we're just about to bring forward a large tranche of 90% money. We need to see more lenders come into that space. That's really important for the market. And then very briefly, I just want to touch on lettings, because this is important, particularly to the buy-to-let lenders, as some of your new build properties may be sold to investors. On the left-hand side, you see a very big pickup in tenant demand immediately after lockdown. That's to be expected, pent-up demand that couldn't be satisfied during the period of lockdown when people couldn't move. And then it's fallen away, but it's falling away to a level which is still measurably higher than it was pre-lockdown, which is good. And on the right-hand side, we're measuring rental arrears. We've got a £400 million rent roll across the Connells Group. And this is measuring the incidence, i.e. the number of tenancies that are in arrears, and also the total arrears as a percentage of that rent roll. And the key trend here is that there's been no significant increase, and a lot of lenders, buy-to-let lenders, were worried about that, that tenants would start defaulting on their rent, and therefore their borrowers, the owners, the landlords, might start defaulting on their mortgages, and that's not happening. So I think the buy-to-let lender community will take some real comfort from the fact that our rental arrears are not increasing. Now, I've thrown a lot of graphs at you in a short space of time and given you a lot of data. I'm very happy to take any questions that you'll have on any of those charts, but it does feel as if this is a clear V-shaped recovery that we're seeing in the market overall. We've seen no concerning trends coming out of the 6-week post-lockdown, and we're very optimistic for the next few months. Thanks very much.
Well, thank you to David. And David, absolutely fascinating insight there. Clearly much more than just an estate agent, some really interesting data about mortgages and valuations, and I'm sure that might provoke some questions. But before we come to questions which have been coming in from the audience, and by the way, our second opinion poll is still running about what delegates think is likely to happen to house prices over the next 12 months. If you haven't taken part in that yet, it's dead easy, please do. David, as I said at the outset, you pre-recorded your piece for us a few days ago. What is your reaction to what the Chancellor had to say yesterday?
Well, the stamp duty holiday is good news. It's meaningful support to the housing market. I'm pleased that it was with immediate effect to avoid any potential distortions to the market, and it's had an instant impact. To give you an example, yesterday and largely yesterday afternoon, our market appraisal requests, so this is people contacting us with a view to putting their house on the market, rose by 60% over the same level of the previous few days. So we're seeing an instant impact from that announcement, which is good news. I would like to have seen an announcement to extend the current Help to Buy scheme. I think that would have been very helpful, but who knows what might happen there. There's a £5,000 contribution to energy saving home improvements, which has largely gone unmentioned, but it does have an impact. And in our business, we've got Vibrant Energy, which is the largest provider of EPCs in the UK, so they'll be very busy. And finally, don't forget my half-price Mackie D's for all of August. Thank you.
Yes, I'm sure we're all going to be joining you at McDonald's. Of course, other chains do exist, David, but thank you very much indeed. So look, you touched on Help to Buy there, and I know David O'Leary from HBF is going to talk about this later, but we've had an interesting question in from Nick Scragg, who's in the audience today. And Nick asks you both, what do you expect is going to happen to house prices after the 31st of March next year? Are we approaching a cliff edge here? We have stamp duty threshold rising to £500,000, but until the 31st of March, we clearly have the existing Help to Buy scheme coming to an end on the 31st of March. Has the government built itself a potential problem for the second half of 2021 with the steps it's introduced at this point? Gronya, do you want to go first?
Hi there. Yes, there's definitely a feeling, because we have the mortgage holidays also coming to an end. So there's a lot of support just being taken away at the same time. So it's a really good point to raise. What we won't know is what the economy is doing at that point. So is the government support going to be enough to get us back up to that V-shaped recovery? And that is the purpose of what Rishi Sunak did yesterday, is to try and power the economy back to some level of normal operation. Can he do it by the end of Q1 2021? So for the housing market, that will be a crucial time, but we cannot rule out more government support. And also I fully expect that banks will be showing great forbearance in that time between now and then. So I'm not sure we'll get a complete cliff edge. Surely there will be some policy put in to sort of round it out.
David, in commenting on that, could you also just, another question that's come in, actually not named, is about the rental market, and I'll come back to Gronya on that in a second, but David, your thoughts first perhaps on next year, what's going to happen after the 31st of March, and secondly, are rental prices coming down, and what do you think the trend is on rental prices?
Well, to take that second question first, we're still seeing a lot of activity and a lot of interest on the rental side. It has fallen back. You may have seen from one of my graphs, it has fallen back from where we started immediately post-lockdown, but it's fallen back to levels that are still quite a bit higher than they were pre-lockdown. So I don't see a fall in rental values ahead. On the issue of the cliff edge, Q1 next year is going to be very busy. There'll be a lot of brought forward activity, and that probably does mean that Q2 is going to be relatively quiet. Whether that will be enough to have a measurable impact on house prices, hard to say at this stage.
And Gronia, what's your view on the rental market? And also a question that's coming from Richard Worth about what's happening in the trade down market, the older people's market, perhaps. Do we see, are there signs of that market being rekindled, do you think, or do you think the stamp duty cuts will help there? We're hearing at the moment perhaps that that's the least active area of the market. Be interested in your views on that, but also on the rental market as well.
So our latest rental index for May shows that UK rents are going up by about 1.5%. Now, our rental index tends to be a bit of a bellwether for what the ONS index shows maybe 3 to 6 months later. So we can see it coming down from about 2.4 at the beginning of the year to 1.5. So we've definitely seen a slowing in rental growth, but we're still in a growth area. Regionally, the picture is quite mixed, however. In London, we've just seen a tiny dip in rents, just dipping into negative territory. A lot of that is to do with supply coming back to the market. There's been a bit of an impact from short lets moving to long lets, and that's boosting supply in some areas. But we've also seen really strong levels of demand at the same time. So on a national picture, the supply levels would suggest that they're not keeping up with demand, but there's some localized trends emerging in markets, which we're going to dig into much more for the end of the month when we update our index. In terms of people trading down, there's been demand right across the board in every price band because we've broken it down when we started to see this rise in demand, just to check it wasn't clustered in one area. But what we're seeing is a broad-based rise in demand across all price bands, all regions. But yes, as you say, in terms of people who are looking, older people are perhaps less keen to come out, but in terms of what people are looking at across the country, it seems relatively broad-based. There hasn't been a sea change from what we saw a year ago or even at the beginning of the year.
Thank you, Gronia. David, do you want to comment on that?
Only to add, Stuart, that probably the retirement home builders are going to have a slightly more challenging time in terms of their customer base being able to just come out.
Yeah, I guess as indeed they've been having, in fairness, for some years, and because of the moribund nature of the second-hand market, which of course they very much depend on. Although I imagine their credentials are looking pretty good coming out of the coronavirus pandemic, because of course the retirement-style housing which we see in this country has actually done very well by comparison with care homes, and that might make older people perhaps think twice about where they want to spend their later years. David, we had a question from Stephen Brazier about down valuations. You talked in your piece about there not really being much of a change in the number of down valuations we're seeing post the crisis by comparison with pre the crisis. Obviously, that was a market whole sentiment. Is there anything happening in the new homes market which is different to the second-hand market on valuations?
No, not particularly. There is a slight difference in the figure that I gave you of 18% incidence of down valuations. We're looking at jobs done by our own chartered surveyors. We've got about 350, and those that we give to the valuations market, to the other chartered surveying firms on behalf of the lenders. There is a distinction there that where we give it out to the panel, the down valuation incidence is about 25%. So it's slightly higher with some firms than with others, and I can't give you a reason as to why that is, but no particular distinction between down valuations on new build versus second hand.
Okay, well, thank you for that. Let me just read you the results of the polls before we move on. Just the headlines coming from the poll results. Thank you very much to everybody who took part and voted. On transactions, the number of you who expect more transactions, quite an interesting result, this poll. More transactions, 32%. I have to say that's slightly higher than I would have anticipated. About the same, 26%. So the majority of you in the camp that it's going to be the same or higher, 42% lower. So that's interesting. I wonder whether that would have been the same result 24 hours ago. And on house prices, 13% of you think they may be higher. About the same, 53% of you think that, and the rest, 34% of you think they're going to be lower. So slightly more pessimistic on house prices than on transactions, and we'll be running more polls on planning very shortly, and I'm sure that will produce an avalanche of responses as well. So look, final question to Gronia and David. kind of a double-headed question. I'm not going to ask you to commit to prices or anything like that because it would be unfair at this point, but do you think the Chancellor is going to be back in the autumn with more measures that are going to stimulate the housing market? Is that going to be necessary?
I think it's a bit of a wait and see game for the Chancellor now, because he's done stamp duty. It's an immediate change. So now he may wait and see how that goes over the summer. As we know, sometimes stamp duty holidays can be very effective over the whole period, but we get an absolute surge before they come to an end as well. But in terms of other areas of the housing market, he'll want to see if that network effect is picking up as much as he wants. Is he getting that feedback from the high street that people are out spending the money that he's saved them on stamp duty? And in terms of Help to Buy, we can't rule out that he makes further moves in that later in the year.
Grainne, thank you. And David, the final word to you.
This Chancellor has taken some stunning steps, ones which I don't think any of us quite expected. So I wouldn't expect to see too much more, with the exception of maybe something on Help to Buy.
Well, and we would certainly endorse and echo any extensions to Help to Buy, and we'll be coming back on that later. But first of all, it just remains for me to say a very warm thank you to both Grainne and David for taking so much time over the last few days to put the slides together, pre-record their presentations, and indeed appear live this morning and do their very best to answer the very interesting questions coming in from the delegates. And thank you to all of those of you who put questions in. I'm sorry that I couldn't get to every single one, but in the interest of time, I do need to move on. And about a week ago, Andrew Whitaker, our planning director, who's well known to pretty much everybody, sat down with Michael Bingham, who's the acting chief planner at DCLG at the moment. This conversation took place just before Boris Johnson's announcement on planning reform, so we'll come back on that at the end. But here's the conversation, fascinating as it is, I think, between Andrew and Michael. Andrew.
It's lovely speaking to you this morning. I'm Michael Bingham, I'm Interim Chief Planner at MHCRG. I thought I'd just kick off by giving a brief overview of some of the work that's currently underway to support the planning system, and there is a huge amount going on. There are three themes I will highlight. The first one is what I've called flexibility and delivery. Now, a lot of this is about keeping the existing planning system moving during and as we emerge from the pandemic. So we've used primary powers through two emergency bills. We had the Coronavirus Act back in March that allowed virtual planning committees to take place. On the 25th of June, we published the Business and Planning Bill, and that brings in a number of things that the sector have been looking for: an automatic extension to planning permissions, the ability for PINs to use a variety of methods when they're holding planning inquiries simultaneously, and the ability for developers to request variations to conditions that limit site operating hours. There's also been secondary legislation, so we've introduced time-limited permitted development rights for cafes and restaurants to work as takeaways, for emergency facilities to assist with the pandemic. And we've also given a commitment that we're going to bring forward further secondary legislation. So that's partly in relation to the ability to use virtual inspections of local plan documents rather than physical copies. And also in terms of allowing deferment of SIL payments for smaller builders. So there's more secondary legislation to come. We've also published written ministerial statements. I think there's been at least 3 of those now. The most recent one, again on the 25th of June, was there to support the Business and Planning Bill, but also particularly in terms of how the electronic inspection of documents can be relied upon in certain situations other than plan making, as I mentioned just now. We've also published a number of changes to guidance where that can also help to keep things moving during the current situation. So, for example, in relation to local plans and neighbourhood plans. So there's a lot of work we've been doing to try and keep things moving, but also we need to keep looking to the future in terms of how we keep delivery going. So there are a number of things that we've put into the public domain as things that we are working on. So the First Home scheme and a review of how we assess local housing needs are two particular priorities that we are progressing at the moment. And also, permitted development rights is something that we've been continuing to work on. So we've introduced regulations to enable building upwards in certain circumstances. And also we're continuing to work on a permitted development right that would in certain circumstances allow the demolition and rebuilding of certain buildings. So that's the first important theme, about keeping things going, about having a flexible planning system, and about supporting delivery, particularly of homes. A second theme, though, and perhaps just as important, is improving the environmental dimensions of development and also the design quality of development, which is very much a government priority. So two things that we're seeking to progress fairly quickly now are the response to the work of the Building Better, Building Beautiful Commission, which was issued at the turn of the year. And also, and it's allied to that, we are working on a national model design code, which will provide a template for local areas to work from in developing their own codes. And on the environment side, there's a lot of work going on to meet the manifesto commitments that wherever possible, new streets should be tree lined. So how can we get those in place as much as possible? The Environment Bill hopefully will be reintroduced to Parliament very shortly, which brings forward a raft of measures, some of which directly affect the planning system, not least mandatory biodiversity net gain measures. And we're also working on a review of flood risk policy to see whether there are any changes that are merited, or indeed any changes that are merited to the procedures for assessing flood risk, so that we can try and mitigate the sort of risks that we saw earlier this year with some serious flooding events, particularly in parts of the north of England. And then the final theme is wider reform, and there's been a lot of discussion generally about where this might be going. We are still intending to bring out a white paper later this year. I can't say exactly what the scope of that will be, but we have signalled that we particularly want to look at how the system is resourced, whether there are further changes to procedure that may be merited, and also, and very importantly, how we can go further in digitising the planning system, building upon the rapid changes that we've seen just recently. We know as well that we will need to have a further look at the National Planning Policy Framework. Some of that flows from the things I've already highlighted, like the work of the Building Better, Building Beautiful Commission, and possibly the work on flood risk, depending on where that ends up. But there may be wider things as well that we need to address through those updates to the NPPF. Local plans as well may be something that we need to look at, potentially through the white paper. There are procedures there that might potentially be improved. There are issues with the timeliness of plan making and the degree to which plans are up to date that we and others are well aware of. So that's something that we're thinking about as well. So there's quite a big bundle of things there for the longer term that we are working on at the moment. And obviously all of these things are being progressed simultaneously. So there's plenty on at the moment. And that's all I wanted to say by way of introducing the work that's going on currently.
Well, there's definitely a lot going on, Michael, isn't there? And thanks very much for that roundup. I'm sure there are many, many more slides that you could have put up for us to look at. The first question I've got really is how well do you think the planning system was able to cope with a global pandemic? Were you surprised at the amount of work that you had to do to allow the planning system to continue?
I think in general terms, the planning system has responded pretty well. Like almost every aspect of public administration and the economy, things had to move pretty quickly. And it's reassuring in a way just how many processes adapted quite easily to working digitally, whether that's the submission of planning applications by applicants, work by consultants, or work by local planning authorities. We did see quite a rapid move towards virtual working, and it demonstrated the art of the possible, I think. Obviously, it's been a bit patchy. We know that some authorities inevitably were geared up more than others to working remotely at short notice. And we've certainly tried to work very quickly to bring in supporting changes that enable digital things to happen where that wasn't previously the case. So that's particularly why we prioritised virtual planning committee meetings as an important step. And I think it's gratifying that most councils have been using virtual meeting arrangements to continue looking at planning applications. So I think by and large, there's been quite a rapid response.
And while some of these measures are quite clearly only temporary measures, do you think that there will be some of them that are carried forward, and which ones are you most setting store by to bring planning into a digital age, for example?
You're right that most measures at the moment are time limited, but we do want to learn from this, and this is going to be one of the big themes for the white paper, I think. We've almost pressed the fast forward button on digitising the planning system, so lots of things that were starting to happen anyway have really been accelerated. Obviously, there are other things that can happen potentially in relation to digital planning, like the virtual presentation of development plans and things like that. But in terms of the administration of the system, a lot has happened very quickly in terms of moving online. There's a lot of lessons to be learned from this potentially. So PAS, for example, is doing some very good work on best practice, and we want to glean what we can from that in terms of whether there are longer term changes that we should seek to embed in the way that the planning system works.
You touched on design, of course, as a very important part of the government agenda going forward, and we all read the report of the Building Better, Building Beautiful Commission, and I assume that you're going to try and implement as many of those recommendations in that report as you can. So how much of a balance do you see the design agenda as being diktat from central government through the National Design Guide, the National Design Code that you mentioned, and local authorities having to produce their own local design agenda?
You're right that it's a top priority for government, and I think the Secretary of State's already said that he intends to respond to the Building Better report as positively as possible and to take forward as much of the gist of that report as possible. There is a balance in terms of the direction that comes from central government and what local government does. So we are seeking to take a lead by publishing the National Design Guide that's already out there and the National Model Design Code that's being worked on at present. But the idea is that they are templates, if you like, to be applied at the local level by local planning authorities and by applicants in terms of how they incorporate good design into their schemes.
Some might say that the increase in permitted development rights is anathema to good design, and that allowing more permitted development rights means that you'll struggle to increase design quality. How do you answer those people?
I think there are two answers to that. One is that there is obviously a balance between flexibility and prescriptiveness in the system, and where permitted development rights are going are situations where the government feels that the principle of development is something that it's okay to establish upfront at a national scale, given the impacts. But there are important safeguards in certain circumstances. So earlier on, I mentioned the latest building up permitted development right, for example. That includes certain prior approvals. One of those relates to appearance. So there will be safeguards that government seeks to include where it thinks it's appropriate.
Moving on to local plans and local plans around the country, I've been at HBF a long time, and it seems that every year the government gives us a new deadline by which time we're going to have full coverage of local plans. And every year the government threatens to take action against local authorities who haven't got a local plan in place. The minister's just given us another deadline or target date of 2023 for full coverage. And it seems to me that some authorities have taken this as an excuse to take a deep breath and say, let's put off preparing our local plan until 2023. What would you say to those local authorities?
Well, I think the first thing I'd say is that where we've previously highlighted authorities that really needed to make more progress, we have seen action. I think of the 15 that we highlighted previously, 13 have now submitted plans. So by working with authorities and trying to get them over the line or to make progress, we are seeing results. You're right that plan making remains slower than we would like. There are issues there that we need to think about. But where there are some of the oldest plans in the system, we are seeing some real progress being made now.
Do you not think that some authorities don't actually want a plan in place? I could mention people like St Albans, York, who are preparing plans that we feel they know full well are going to be thrown out at an early stage. And they can point to this and say, oh, it wasn't our fault that our plan was thrown out. It was unsound. It was the inspector's fault. And they're putting the blame back on you.
I think most authorities, in our experience, do want to get a plan in place. Clearly, the consequences of not putting a plan in place are different for different locations, where you've got Greenbelt, for example, unallocated land that's in the Greenbelt obviously has a high degree of protection in terms of national policy. And again, there's a bit of a balance here for government, because there are certain things where we say nationally there are important protections like the Greenbelt, but equally we do need to see progress with plan making. I don't think many authorities actually don't want to put a plan in place. And I think from the feedback we get, they tend to get quite frustrated where there are hurdles along the path, if you like.
Are you concerned about the people who've been trying and striving to get joint planning work done, like Greater Manchester, like South West, North Essex, Oxfordshire, for example, who signed up to a growth deal and now seem to have kicked the can down the road? Are you worried that the duty to cooperate and strategic planning doesn't seem to be able to continue in the current planning climate?
It's certainly a concern that a number of strategic plans have not made the progress that was hoped for. We're very much in favour of joint planning and strategic planning, for example, for metropolitan areas. It is a good way of trying to resolve strategic issues. I think it's important that we all learn from the recent experience in a number of locations as to what the hurdles have been for getting those in place. And that's certainly something we want to reflect on.
So moving on to the future, Michael, do you think that we're facing a planning revolution, or are we going to see evolution of the planning system?
I think it's genuinely hard to tell at the moment. The government is certainly thinking about the longer term future of the planning system. We're at this fairly unique time where we've got a combination of economic challenges, continuing social challenges, not least in terms of people having a home of their own, and of course big environmental challenges. So what we need to think about is whether the planning system is fit for those different purposes, and in particular whether it offers enough certainty in certain respects, but in other respects whether there's enough flexibility. So for example, where land might need to change use quite rapidly because of the very rapid changes in economic circumstances that we're seeing, does the planning system facilitate those changes quickly enough? Those are the sort of big questions that we need to be thinking about.
So do you think now is the right time to introduce major change to the planning processes that we all know and love? Would it not be better to let everyone take a deep breath, get back to work and implement what they know?
There's perhaps never a good time for planning reform. People will always argue that things should just carry on as they are. But equally, we do need to think about the circumstances we're in and whether there are sensible things that we could do with the planning system that would make it operate more effectively for all of its different users, whether that's applicants, the local community, local authorities. So, we think that there are some important questions that we ought to be considering, but in terms of where that will end up, I can't say just yet.
We're going to enter a question and answer session with the audience, but I know two questions that they are going to ask. The first is, are we going to see a review of Greenbelt policy and Greenbelt boundaries around the country? And the second is, when is this all going to happen, Michael? When are we going to see the planning white paper? When are we going to see these changes take place?
Yeah, there is always intense interest in the Greenbelt, and clearly the government has said that it remains committed to preserving the Greenbelt. I can't say whether there will be any further changes to Greenbelt policy around the margins or any wider changes. At the moment, that's not what we're thinking about in terms of where the NPPF is. Certainly, there's very clear policy on the Greenbelt. In terms of your wider question about when things will happen, we are still working on the white paper, as I said. Timetables that we envisaged back in March inevitably have been affected by the pandemic, so which has pushed things sideways. I'm hoping that there might be some announcements before summer recess, but inevitably some things are probably going to be later this year at the earliest. So we'll just need to see how things pan out. We are trying to progress these things as quickly as possible, but inevitably our working ability has been affected both by all of the emergency response work we've been doing and by the redeployment of planning staff onto other emergency work within the department.
So thank you very much, Andrew Whitaker, Michael Bingham. Fantastic insight there. And also, we've been running a poll whilst we were listening to your interview, and you may see that the results, which were that about level pegging here, about 1/3 of our delegates responding thought that there should be a fundamental review of the local, a fundamental review of the planning system from first principles. And another third thought that there should be increased resources for local planning authorities. So in terms of the fundamental review of the planning system from first principles, an interesting answer in reflecting on the Prime Minister's announcement speech last week, when he talked about a reform of the planning system, unlike anything we've seen since the Second World War. So I'm delighted that Andrew and Michael are both here live to take questions and to have a conversation. So maybe we could go there. Andrew, first of all, in terms of the reform of the planning system and also the resources that are required to process planning applications.
I think fundamental review is always a problem because people don't know what to do. You know, is it as I said in the session with Michael, is it better for people to pause and carry on doing what they know how to do? With regard to resources, it's always keen for people to put that onto planning application fees. But actually, I think local authorities need to invest more in their planning departments. If it's an important function for them, they ought to be prepared to invest the society's money from council tax into their planning service.
Thanks, Andrew. And Michael, so just in thinking about the Prime Minister's speech and the announcements that have been made with regards to that fundamental review and the timelines for that in terms of the white paper, when do we expect to see these things happening?
Well, Neil, the Chancellor confirmed yesterday what the Prime Minister said last week, which is that we intend to put a paper out very soon now, before the summer, looking broadly at the future of the planning system. Although, as I said previously in the presentation, we are working on a number of shorter term measures as well. So you can expect a number of announcements. And to pick up on what Andrew and others have said, we are very conscious that in bringing forward any proposals for reform, we need to be really clear about what those are and how that might affect things that are in the system, because the last thing we want to do is cause undue disruption to the market, delay housing or other schemes that are in the system. So that's one of our key considerations. And we are looking very broadly at a number of things that have been raised today and in the questions on the chat. So certainly things like resourcing of local planning authorities, how we bring sufficient confidence and flexibility to investment in the high streets, all sorts of issues like that are things that are in the mix.
Thank you, Michael. And thank you for those that have submitted questions today. I'm sorry that we haven't got time, unfortunately, to go through the questions that have been raised, but there are things regarding Section 106 and SIL, and Michael touched on in his response there in terms of the considerations for government at the moment. So, as I say, in the interest of time, we've got about 15 minutes to go of today's session. So I would just like to say a very big thank you to Michael Bingham for preparing his presentation, being interviewed by Andrew, and joining us live here today. So thank you very much, Michael. So moving on into the final session for today, what we've done today was we brought together a couple of more members of the HBF senior management team. So I'm delighted that I'll introduce David O'Leary in a moment. David will be well known to you as Policy Director for HBF, and also Kieren Walker, who's our Technical Director. And they'll be joining Andrew, and we'll deal with some of the questions that have been coming in today. The reason for bringing David and Kieren is when we ran the previous one of these webinars about a month ago, we received an overwhelming number of questions in two areas. One was on Help to Buy, which has come up today repeatedly, and the other was with regards to the changes to the building regulations, in particular those that were due regarding energy conservation or are due this year. So we brought David and Kieren in to join us. And of course, Andrew will stay here for any questions in relation to planning, which you may still want to submit. Just to reassure you as well that Stuart's still in the background, and we'll see Stuart at the end. So anything else that you'd like to hear from Stuart about, we will have a moment or two at the end of this session. But Help to Buy has been dominating the agenda for some time now. There's been extensive coverage in the press this week, but it hasn't formed part of the announcements made so far by government. I think what I'd like to do next is to turn to David O'Leary just to introduce the issue, because there's lots of Help to Buy is a term which is bandied around quite easily, but it is actually slightly more nuanced than that in terms of the existing scheme running out at the end of this year and potentially a new scheme coming in as slated next year. So I'll introduce David now and just ask him to talk us through some of the finer details of Help to Buy and what we mean by an extension to Help to Buy. So over to you, David.
Thanks, Neil. As you say, we've heard a lot about Help to Buy today, and in some of the questions that have been posed to David and Grania earlier. So I thought it might just be worth stepping back a bit and reminding ourselves of the importance that the scheme has had in its current guise, how we think the 21 to 23 Help to Buy scheme will change things moving forward, and the transition issues that we've talked about over the past 6 months in particular, but really since the pandemic really took grip, and the impact that that's going to have on buyers. And we've seen a bit of media interest in that over the past week or so. The first slide I really wanted to show, I think, really demonstrates the importance that the scheme had pretty much immediately upon its introduction in 2013. The slide shows a number of factors that developers can choose from in the HBF monthly survey, which, identifying the major constraints on housing delivery. And you can see here with the dotted line that when Help to Buy was introduced back in April 2013, pretty much overnight, the issues highlighted in pink and blue on the slide, mortgage terms and mortgage availability, pretty much collapsed overnight as a constraint on housing delivery. So, you can go through this slide, and it's a very interesting story about the measures that government introduced on home ownership and mortgage support. So early in the kind of in the recovery period after the financial crisis, 2010, 2011, mortgage availability is a real constraint. 90% of developers are confirming that that's holding them back. New Buy came in around about 2012 and had something of an impact, but nothing like the game changer that Help to Buy was. And pretty much ever since 2013, this has been not an issue, really, not an impediment to housing supply for developers. And then moving on to the second slide, this shows the impact that it's had on investment. So investment decisions by developers using, for this purpose, the proxy of investment in future land and housing delivery. So this plots planning permissions granted on an annualized basis. Again, impact was pretty quick. By the time the industry had got used to the scheme, and the scheme had been extended from its initial 3-year period to a longer scheme, that investment began to ramp up significantly. So pre-financial crisis highs of around 250,000 planning permissions per year are now dwarfed by what we see, which is consistently above 350,000. And then I think moving on to the third slide, finally, you can see what that additional investment means and what that support for buyers means in terms of new build transactions on this next slide. So index back to the year 2000, you can see new build transactions compared with existing property transactions. And by turning the kind of what you might call unrealizable demand for new homes into effective demand through Help to Buy, we've seen new build really outperform the second-hand market, and in particular since 2016. In normal times, the new build market and the secondary market track each other pretty firmly, and so this goes all the way back to the year 2000, and peaks and troughs broadly follow each other. You can see that sometimes, for instance, the trough in the financial crisis in new build was a bit flatter, and I think that probably reflects the fact that developers are having to transact even in those difficult times, rather than it being a discretionary transaction. But generally, there's really strong correlation apart from this past few years. And so while the second-hand market has flatlined, we've seen that new build has performed really well. And I think that can only be attributed to Help to Buy. I think I do spend much of my time claiming that that's purely because new build are just a far superior product and everyone wants to buy and own a new home. But I think realistically, we can all admit that Help to Buy has done that, and that's contributed to the major increases in housing supply that we've had over the past few years. And then the next slide, moving on, highlights a few elements of the new, more focused Help to Buy scheme that we are anticipating coming into effect from next April. And I think the idea here is just to show why we think there are some challenges around that transition period. While the new scheme opens in April, and that's the formal opening of the scheme, there are a few important milestones before then. So, for instance, we can't take reservations on the new scheme until sometime in the autumn. But the key one, the one that we've spent a lot of time talking to government over the past few months, and even before that really, is about this deadline in 2020, December 2020, for practical completion of new homes that are to be built under the current scheme and sold with the current Help to Buy programme. So although, as I say, the existing programme will be open until the end of March, those properties, currently the rules state that those properties have to be built and complete by the end of this calendar year. And because of the delays that we've seen due to lockdown and because of social distancing measures on site affecting productivity, we anticipate that there are probably 18,000 minimum would-be Help to Buy completions that now won't take place this calendar year. And the affected groups can be broken down into three clear, distinct groups. One are non-first-time buyers. We know that they won't be eligible under the new scheme, pretty simple. Second, first-time buyers purchasing within the forthcoming thresholds for the new scheme. And we think this is about 60% of current buyers. But we know that even though they will be eligible for the new scheme, it's likely that they will have to delay their purchase. So even if their home is ready in February, if they want to use Help to Buy, they're going to have to wait until April. And then finally, probably the most vexed issue is first-time buyers who the government is keen to support purchasing properties above the relevant regional price cap, and they will need to either get a new mortgage without Help to Buy or buy a different property. And we know also that the price caps, so moving on to the next slide, we know that the price caps for each region are, again, another vexed issue that we've been in discussion with government over the past, ever since the scheme was first announced more than 18 months ago. So this slide compares the regional price caps and the impact they might have when they come in each region. So in addition to the dotted line here, which shows where that cap will affect each region, we've got other relevant average prices. So average Help to Buy prices as things stand, the average first-time buyer Help to Buy price, non-first-time buyers, and then average new build and all homes price. And what you can see is that the prices, the caps have been set according to the final column in these slides. That is the average first-time buyer price in each region. And so if you looked at this slide, you might think there's not much of a problem here. There's considerable headroom in most of these regions between where the bulk of transactions are happening and where the new price caps will come in. So in London, for instance, 95% of buyers are who currently use Help to Buy are first-time buyers, and there will be no change in the price cap. So 95% of buyers will continue to be eligible. But then if you compare that with the final slide, in these 4 regions, sorry if you're a big fan of the East Midlands, there wasn't any space for the final region. So we've picked out 4 here. But you can see the difference that the price caps have. In these regions, there's a far higher differential between average new build prices and average house prices across the board. So that points to a focus, I guess, from developers in these regions of focusing housing delivery in areas of high demand relative to other parts of the region. And there's far less headroom in many of these regions. So in the context of the red wall at the last year's election and the government overcoming that red wall, we think there's probably some scope here to either look at changing these price caps or ideally roll over the current scheme and roll into the next couple of years without really implementing the new changes. Sorry, Neil, it's a very whistle-stop tour, but hopefully gives an understanding of why we think this is so important for the industry's prospects over the next 6-12 months.
No, thanks, David. I think that's very insightful. And I think you've set out the issues there, which they do need to be separated out, because we have this issue that we haven't seen before about the end of the current scheme, the production delays caused by the pandemic, and actually a big consumer issue with people being caught out who have made reservations who won't get the home and won't have access to the new scheme. And then separately, with regards to stimulus, the potential for extending the current scheme through the 2 years that are slated for the 2021 scheme and the benefits that would bring. So they are different arguments that they're currently playing out, and hopefully we'll see some progress on that. Thanks very much, David. So just as I said, the other big area of concern, I think, at the previous HBF webinar that we ran was around changes to building regulations, in particular building regulations parts L, energy conservation, F, ventilation. There's another piece around electric vehicle charging as well. So we thought we'd bring in Kieren Walker, our technical director today, just to give you an update on the progress as we see it that's being made with regards to those announcements. Over to you, Kieren.
Neil, good morning, everybody. I really wanted to come here today with a meaningful update on Part L and F. I'm sure all of you are aware of the then Chancellor's statement back in March 2019 that we were going to remove gas or fossil fuels from our new dwellings from 2025, and we were going to have a future home standard and a new building reg Part L and F, as Neil's just alluded to. The consultation on this closed in February of this year, following which we went into lockdown. Unfortunately, we've not been able to get a meaningful update from government on the implementation of the new Part L and F. I understand that we've had over 4,000 responses to the consultation via government. For those who haven't seen, the consultation itself set out 2 options in terms of the meeting of the future home standard. One was a 20% reduction of overall energy emissions, and the second was a 31% reduction. As we say, there is no meaningful update from government yet, including an update on transitional arrangements and the likely implementation date of the new Part L. We are talking with government regularly. I'm having bi-weekly calls with MHCLG to understand the likely timescales for implementation of this building regulation, but as yet we have no update. As soon as we do have an update, we will of course communicate this with the membership and the wider audience. The same is true of the electric vehicle charging points. The consultation closed at the end of October last year, and we still await a meaningful update. We've had feedback, we've had further discussions with MHCLG on the mandatory requirement for electric vehicle charging points in new dwellings, but again, we have no understanding of implementation or indeed transitional arrangements either. That probably covers building regs, Neil.
Okay, well, thank you very much. I think time has beaten us today. Tremendous content from all of our speakers. Sorry we haven't got time to take any more of the questions that have come in. Exactly as we did before, we will provide answers as far as we can directly or on our website together with the slides. But that's it from me. I'll hand back over to Stuart now to close this event.
Well, Neil, thank you very much indeed. And thank you to everybody for coming along this morning, in particular to our speakers, of course, to Gronia to David Livesey, and also to Michael Bingham, plus the members of the HBF team who took part. A brief reminder that the slides will be available on our website. We'll notify you of that. But also, if you or any of your colleagues would like to look back at any of this event, then that will also be possible from early next week on our website. Just in terms of future events that are coming up, we're going to give you a little bit of time off in August from seeing too much of us. We will, of course, still be on the air and working around the clock as always, and we will keep you up to date via our thrice weekly news briefings. They now go out Mondays, Wednesdays, and Fridays. And also, of course, any big developments we will update you on immediately. And our coronavirus resource page on our website remains live, and it's a fascinating source of information for anything you might want to know, particularly about government schemes. So these are the events that are coming up in September. In fact, the first one's in July, and then the others are in September. But just to make dates for your diary, July the 20th, the 27th, we have the New Homes Week Unlocked, an opportunity to promote the industry, promote the value and benefits of new homes. And if any of you want to take part in that and haven't already decided to do so, or are not already part of some of the plans that are going on around the country to promote new homes, please do contact us and we'll make sure that you're able to take part. And then in September, 3 dates for your diary. The next webinar like this will be on April the 10th. It will be a double header. It will be our annual general meeting, which many of you attend normally in April, and sadly this year we've had to cancel that. We were hoping still to be able to hold it, but it's proved impossible. So we're going to go online instead, and we're going to have a 90-minute member briefing with the HBF team, which will bring you up to speed with everything that's happened between now and then, and that will be followed by our AGM. And then a week after that, on September the 15th and 16th, 15th and 16th respectively, will be our planning conference and our technical conference. So Andrew and Kieren and guests will be back for that as well. And those are events you might want to mark in your diary now. And of course, we will contact you shortly and be promoting how you can join and sign up to register and watch those events very shortly. So that's it. I think all it remains for me to do is to wish you a very happy summer. Some things don't change. This is a very unusual period, but for those of you that follow cricket, I can tell you England are struggling this morning. It's just started raining and they're 60 odd for 3 as wickets have been tumbling. So the rain might be good for England cricketers at least, if for not for anything else. I hope you manage to get some downtime in August. It may be more difficult to get away, but get some rest and relaxation. It would be good for everybody. I think it's been a very intense period for the entire industry. And all that remains is me to say thank you very much indeed for tuning in this morning. Have a good summer, and we will see you all very soon. Goodbye.